So in this session, we're going to pull up TradingView, and I'm going to show you guys how to chart assets, look for setups in order to trade. All right, so the website I look for or the platform I trade with is TradingView. Okay. All right, so you can go into the search box and you can look up stocks, futures, Forex, crypto, whatever you guys want to trade, options. It's all here. But we're just going to start with Apple. All right, we'll pull up Apple, launch the chart. So here's Apple chart. And you guys can do this on the phone, but I would prefer you guys do this on a laptop, iPad, computer, something like that. That way you guys can see these candlesticks better. All right. So we have the Apple ticker right here. Ticker is just abbreviation of the asset. So for Apple it's AAPL. Right here we have the 5-minute chart, and you got all charts over here, all the way to the 1-day chart. 1-day chart just consists of whatever the candle, whatever the chart it is, like the daily chart, the candles will represent whatever time frame that is. So if I'm on a daily chart, these candlesticks are representing 1 day. If I'm on the 1 hour chart, these candlesticks are representing 1 hours. Right. If I'm on a 5-minute chart, same thing. These candlesticks are representing 5-minute time frames, and you can go all the way to 1 minute. Uh, you guys want to write this down. If you're swing trading, that means if you buying a asset Monday and you want to hold it overnight into the next day, the next trading day, let's say Tuesday, for example, that's called swing trading. All right. If you're day trading, you're selling the same asset, you're trading the same asset, buying and selling the same asset in the same day. That's day trading. All right. So again, if if you're swing trading, you want to be on the daily chart, 4-hour chart to the 1 hour chart. If you're swing trading, if you're day trading, you want to look at the 1 hour chart, 15-minute chart, 5-minute chart to the 1 minute chart. All right. Whatever setup or time frame that you prefer to trade with, that's up to you. Okay. So those are the time frames of trading. Now over here to the left, these are tools you can use to look for trades. So right here, this is a trend line. You can use that to figure out what is the trend of the what what is the trend of the asset at that time. So for example, Apple. The trend of Apple is doing what? If we're looking at this trend line, it's going in an upward kind of sideways action, more in the upward because it's going in diagonal, going upward. You can use this trend line to see where the candlesticks are trading for support. All right. Remember, support is where stocks tend to trade to, and it holds that trend line and it goes up. Example, this trend line slash support level, every time Apple comes to this trend line, it bounces up. That means it's a support level. Same thing for resistance. So you guys want to write this down. You have a support level and you have resistance level. Resistance means the stock is trading up to a certain level and is rejecting. Okay? And I'm about to show you guys an example right here. Let's go right here. So Apple hit this line, rejected, came back up, touched that line again, rejected. That is a resistance level. So you also can label these tools too. So this is the trend line. I'm going to label this resistance level. That means I know that every time Apple has hit this line, it rejected. So go to the top, center. You see that? Now I know if Apple reject this level, it can go higher. But we want to wait for confirmation. Okay? So although we had a spike there, it went back down. So we didn't get enough volume to push this stock higher. And what it do? Come right back down and test this trend line again before going back down to what? The support level. Now, knowing this, we can trade this. We can trade this. Okay? If Apple come down here, let's say you want to trade Apple, you want to put a call on Apple. A call means you're betting or you're saying that Apple is going to go up, and when it do, you're going to make money. So it goes up, you would have made money. You can then sell because you know at this level right here, we're going to get resistance. So you can take profits at this level. Okay? This is called resistance and support level. When we use trend lines to find these resistance and support levels. Write that down. We use trend lines to find resistance and support levels. Okay? Let me take that off. I give it a second that y'all screenshot that. All right. Let's find another support level. I see one right here. Y'all see that? This would be what? Give it a second so y'all can answer. Yes. This would be a support level. Apple went up, touched this level, bounced back up. So we can, if we didn't get an entry right here, we can wait. And that's what trading is about. It's mostly about waiting. It's waiting for the perfect setup. Instead of just getting it here, because you missed the entry right here. Instead of getting it right here, we wait. We wait until it come back to this support level, or we just miss out and we wait for the next setup. So Apple came back down here, this candle right here, and what it do? traded sideways and took off. This would have been a good entry if we missed it right here. And look at that. This actually was a better entry, right? That's why trading is mostly about being patient, man. Okay. Now let's try to find a resistance level. Let's see. Is this one? This is somewhat of a resistance level right here. So from here, here, and for it to be a valid, write this down. For it to be a valid support and resistance level, it needs to at least touch that level 2 to 3 times. I prefer three. I prefer that third time it touching is golden. We know that trend line is official. Yes, we see this candle right here, wick above this resistance level, but the body dropped below. All right. And we talked about wicks and bodies of candles, open and close, high, low, uh, on another session. Right now, we're just talking about indicators that we use to trade and we look for. See, it went up here, drop. So this is a resistance level. We know that if you want to short Apple, meaning you're saying that Apple is going to fall if it hit this level, you shorten it. That means if Apple drop in price, you make money. You make money by Apple dropping in price. You can get a put. Write this down. You can short Apple, meaning you can get a put, short selling Apple, and you make money if Apple price falls. All right. You can get a call on Apple, meaning Apple is going to go up in price and you make money. So you got calls and puts on the stock options. Calls and puts. You can grab calls off this support level. You can grab puts off this resistance level. Or you can take profit at either level. So if you want to short Apple up here, get puts, and you know it's coming down here, but you know that Apple probably going to bounce off this level, you can look to take profits as we get close to this level and vice versa. That's support levels, resistance levels, and we use trend lines to find these levels. All right. Let's see. So you got trend line right there. And then you also can use this right here, horizontal ray. And you could just tap the bottom of that candle and go straight across. Say you want the resistance level or support level. You just change the color right there. Now you have that level. If you wanted to add some type of text to it, you just go to text. Wherever you wanted at, you put middle, top, bottom. I use bottom. Then I put center. You can put right, left. It's up to you, all your preference. So now I know that this right here is a support level. I actually want that blue. Now I know that that's a support level. Same here. Apple is actually falling back to the support level. If it breaks the support level, we can look for the next support level. We want to see Apple bounce off the support level before we enter because it can break right through it and come back down to this support level. So until we see Apple do something like, let me zoom in, or any asset, do something like this, come down, touch this trend line, support level, and go green or have this long wick off this support level, we know that's bullish. That means buyers seen that it came down here and they bought it up. They came in heavy. Bears didn't stand a chance. The Bears wanted it to go lower. The Bulls said, nah, we got it from here. So they bought it up. It consolidated. That means it just traded sideways. The Bulls and Bears are fighting. And then it broke out. The Bulls won that war right there. They won that battle. Okay? So we always want to wait for confirmation. You guys can write that down too. We always want to wait for confirmation before we enter on the trade. All right, let's see another one. So you got text. If you just want to write you something on the side, something like this. Something like that, just to remind you that, let's see right here. I'm telling myself, hey, this is my target level. If it hits this, I'm looking to get in. That's just a reminder because sometimes it take days or hours and you on to the next trade. When you come back, you got notation to let you know what you're looking for on the trade. So that you can use the text option for that. Another one that I use arrows too. I like to let myself know that if I got in on the trade right here and I know it's resistance up here, I'll do something like this. I'm looking to take profits right there. So I know. So I got that. If I bought here, I'm telling myself I'm looking to take profits here. Why? Because we got resistance. Resistance right here. So I just notate, target, something like that. So that's another tool you can use. And here's one more. All right. Here's one more tool you guys can use. This one right here. Fibonacci. Fibonacci retracement. This one right here. You go from the bottom, the low, to the high. These levels is usually where stocks would trade before they run back up. And that's the Fibonacci level. All right. So these when levels bounce off, when price or candles bounce off these certain levels, you can look to get in on these certain levels. So it look like Apple want to come back down to this level, 245, which would be support. But let me give you guys another example where it'll come down to this 0.5 level. See, why we're gonna do this one. Let's see right there. Stand to the right. Look at that. When Apple dropped down, I got the low to the high. I did this fib from the low to the high. That mean when Apple got down to this level, a lot of buyers got in, which is at 0.5. Almost got down to 0.68, but point 0.5. Yeah, it wigged through, but look at the most majority of these bodies stayed above it. That's a good signal to get in. Look, every time it came down here, we went right back up. Yeah, this one broke below it, but the next candle shot right back up. Remember, I told you want to look for confirmation. This candle is confirmation. That's bullish. Look at this one. Dropped down to this point 0.5 level and took right up. Took off. Same thing here, here, and here, and here. That's why Fibonacci levels are very important. Let's take it even higher. From that low to this. Look at that. 0.618 level. It's heavy off that level. So if you're a buyer in Apple, you just put up this fib and you try to see where would you like to get in on Apple at. That's that's what we use the fibs for. Let's do this one right here. All right, so 0.38. I usually like to see if I'm using the fib, I want to see the point 0.5 level hit target. And y'all can write that down. That's what I usually want to see. I want to see, let's see. I want to see the point 0.5 level target and I want to see bullish momentum. That means like these wicks, look, buyers came in, stepped in, they bought it up. So if I got a fib here and I all the way up to this high, I'm looking to buy in right here at this point 0.5 level. If it's break below this point 0.5 level, like this 0.618, this 0.786, I'm cool. I'm good. I want to see heavy buyers come in right here. Okay, it's Fibonacci. So we got the trend line that we can use, the horizontal ray that we can use, the Fibonacci retracement that we can use. If you wanted to zoom in, you got the zoom in option. And remember, we have the ticker right here, or whatever stock you wanted to do a technical analysis on. And you got the 5-minute chart. And you can just press that and you can go to different time frames of the market. You can go all the way to the month, 12-month. It all depends on what type of trader you want to be. If you want to be a swing trader, you're going higher time frames. If you want to be a day trader and you just looking for quick moves, you're going to lower time frames. These levels down here is just value. It's telling you how much buyers stepped in and bought. But buyers came in heavy. Look all that value. When the volume low, the candlesticks are really small. When the volume bars are large, you see movements like that. And then you have the time frames, and then you have the price levels to the right. Okay? Let's see. Some people use indicators as well. Here's some indicators like moving averages and RSIs. I'm not going to get into all that. I don't really use them, but it's your preference. If you want to throw a RSI chart on there, you can. This just pretty much tell you if a stock is oversold or overbought. Let's just say we go to on a 5-minute chart, this stock is oversold because it's at the bottom. So you got the top, the bottom, you got the middle. Being that it's at the bottom is oversold. And you can step in to start buying if you was on the day trader side looking for it to go up a few dollars and you make money. Let's go to the daily chart. The daily chart is still above the midpoint. That means it's still kind of expensive or still kind of overbought. And yes, Apple is still close to the all-time highs. So this is not lying. And right here, look, it's all the way over this line. That means it's really overbought. And look, Apple was at all-time high right here. And if you look right here, Apple sold all the way off. And look where it's at on its RSI. So that's a signal to buy. So you can just buy Apple just off looking at this RSI. I don't use it. I used to. I don't use it no more. So I got other ways to look for signals to get in and buy. But this will help you out too if you want to just do it like that and you don't want to go through all the technical BS. You can just use something as simple as this. Trend line. Oh, look, perfect example. Watch this, y'all. Right here. We have a trend line. And this is what? Yes, support level. And then if we pulling up that RSI chart, where the hell it go? RSI. Oh shit. I got signed into my other account. I don't feel like doing all that. Thought it was on here. Where the hell it go? There we go. All right. So we got the support level. It came back down, touched that support level, and look at this RSI. So if you got this level right here, because we touched that once, two, that's three touches. And then look at this. There's a signal to buy. Just off these two technical analysis or signals, you can buy and get a call. We're gonna talk about calls and puts and how you do contracts and all that stuff in another webinar. But this is just showing you guys how to look for setups. All right. So we're gonna end it off like that, man. So again, you guys want to go to TradingView, type in a ticker at the top in the search box, any asset, whether it's futures, commodities, or stocks, type it in the search box, pull it up, and then look for setups using the trend line, the support levels, and resistance levels. If you want to use a RSI, you can. And you know. All right, I'll tap back in with y'all in the next webinar.